Joining us now is Vital Knowledge founder Adam Crisafulli and Quadratic Capital Management CIO Nancy Davis. Great to have you both here. Adam, I'll start with you. Stocks under pressure today. Almost every sector in the S&P finishing lower, with the exception of healthcare and communication services, basically flat. A lot of focus on higher energy prices in recent days, higher yields in recent days, and a stronger dollar. Your thoughts?
Yeah, definitely. I think that, there's a lot of anxiety around the inflation dynamic with oil prices causing a real acceleration in inflation. The real catalyst for the sell-off this morning came at 8:30. You had a very hot Canadian CPI report. Normally U.S. stocks aren't very responsive to Canadian economic data, but I think just helped reinforce or underscore the existing anxieties about what's happening with energy prices and the effects this will have on global inflation. Like you mentioned, very impressive rebound off the lows, even though treasuries ended near their lows of the day. So stocks bounced, but treasury prices were under a lot of pressure into the bell as we look into tomorrow with the Fed. I think there are a couple reasons why the Fed tomorrow, on an absolute basis, is going to be hawkish, but there are reasons why I think it's going to actually look dovish relative to expectations.
Okay, I want to get into that. But first, Nancy, your thoughts, particularly what the bond market is telling us right now ahead of that Fed meeting and the results, the comments from Powell tomorrow.
Well, I think most people are expecting no hike tomorrow, but Powell to be very hawkish with his commentary, kind of a repeat from Jackson Hole in 2022. And he sounded like Ric Flair, right? He was like, woo, we're going to hike. Things are going to get tough, because although they're not going to hike likely tomorrow, inflation data has not cooled. And, we are seeing a lot of pressure given the rise in oil and gas prices.
Yeah, Ric Flair. I like the little shout out there.
You remember him?
I remember him, and his daughter Charlotte Flair is my daughter's a big fan. So I appreciate the metaphor there. Adam, I do want to get your thoughts on what you expect from Powell tomorrow. It's priced in that we're not going to get a hike, but this idea of higher for longer, what the dot plot tells us, and to Nancy's point, just continued hawkish rhetoric here.
Yeah, so I think it's going to be a very nuanced report with a lot of different moving pieces. So we know we're not getting a rate hike. Powell will not close the door fully to future rate hikes, but I think it's pretty clear, and I think this will be the message tomorrow, that the funds rate ceiling has been reached already. And he will emphasize how the Fed is going to keep rates elevated for an extended period. But the market's repriced pretty aggressively already. So the market-based year-end 24 funds rate rose above 4.6% today. That's above the current dot. I think most people assume you're going to get an increase in the 2024 dot tomorrow, but the market's pricing a lot of that in. And again, I think there are reasons why it can look dovish versus expectations, one of which is the distinction between headline and core inflation. Headline inflation is reaccelerating. It's probably going to reaccelerate further going forward, but core prices are still on a downward trajectory, and there are depressants that can weigh even further with housing and shelter prices in the months and quarters ahead. The labor market continues to normalize. You've seen a lot of progress on this front, in particular the JOLTS readings. I think that's something Powell emphasized as well. And there are a number of growth headwinds on the horizon. So in recent commentary, the Fed has talked about risks, meaning the risk of growth on the downside versus the risk of inflation on the upside, are turning more balanced. And I think he's going to acknowledge some of the headwinds lurking on the horizon, whether it's student loans, whether it's the exhaustion of excess savings, the various different labor strikes, the government shutdown potential, et cetera. Yeah.